The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, as I get my levels right. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And we've got the S&P 500 at 2681, which is up 25 points. The Dow up 261, 24,621. The NASDAQ 7164, which is up 57. And I think it was rather predictable. We're going to show you a little spreadsheet I did from Friday. And show you why I suspect that the bounce was pretty much set in on Friday. When we look at things like volumes today, they're not exciting. We're just coming in at about 3.3 billion shares. But again, if you are bearish, this is a good time to really write down your feelings every day. I'm actually was before the show today, going through my newsletters of late April and May of 2012. And I turned up some charts that I didn't know I still had, which was kind of neat. Found them bouncing around in some of my old newsletters. But what you've got is basically a market that if you're bearish, you don't want volume to actually come into the market. You want this thing probably to go up till the end of or start of May, somewhere around there, maybe first or second. Still can't hold highs with all the fund money coming in and coming off this week with expiration, options expiration. Again, you need, during options expiration, a overwhelming or an abiding belief that the market is going lower, because the bias is 80% of the time higher, or at least it stays the same. So if you're really bearish, normally I've got to have a lot of reasons to figure out that I'm going to be pulling the trigger short going into options expiration sometimes. And then of course, you got options rollover, which is Monday and Tuesday next week. And generally, you don't get a good opportunity. But the Wednesday after that is kind of the first window that you see. Now, that takes us right into fund buying and a couple of days later. So again, I'm thinking that this is a market that was very much like that late April, May timeframe. And I'm waiting to see whether volume comes in at some of these higher highs. Right now, it seems rather wimpy. So, but again, you could have done the exact same thing in April, I think, of 2012. I'm going to confirm that a little bit more as I read through the newsletters. But it just felt like that was, all right, and this is what's going on. Early on, a couple of years of being a full-time trader, around 2000 or 2001, I heard Tom and a handful of other people that were Tom O'Brien and a handful of other people. And basically it comes out to something like this. Tom says that you got to go through a few cycles to really learn. There's nothing like acquired knowledge. You can't teach some people some stuff. And if you haven't been through some up and down cycles, you haven't really seen it. But you know, even in a market that was eventually going higher, we got to this point where it was fairly weak on QE. They were going to come in to save the day after the market got clubbed in that time frame. But it just felt like everything that I experienced before. And, you know, even if you're not writing a newsletter, you know, a little bit of diary of what you were feeling at the time. I remember I learned this from learning to fly. My flight instructor said, okay, see that little section over there in your book? After you get done flying, just write some notes down in there. And then when you go back and maybe you're flying to the same place or you experienced something before, you go back there and it kind of brings you back to what you felt and what you were looking at. And at least you learned something. You got to apply what you learned. And I've kind of done that in most of the stuff I've seen. In fact, told everybody last week that if you want to see a very interesting documentary, there's one on HBO right now for a comedian, and now I'm having a mental blank again. He just passed away a couple of years ago. Everybody loves him. Man. What was the name of him? It's Gary Shandling show, but it's not Gary Shandling. Is it? Yeah, it's Gary Shandling. So, no, it was Gary Shandling. It runs about 4 hours. But Gary had a notebook with him everywhere he went, and he wrote down jokes and everything he was feeling every day. And they go back through this notebook and really figure out why the guy was so troubled and why he really couldn't be happy, but he's a comedian. It's kind of like a plumber whose house all the faucets leak. A comedian that can't make himself happy, just never satisfied, kind of a perfectionist. Tortured is a good word about it. They pretty much, and he says so, that his brother dying at a very young age and his mom's inability to deal with it kind of drove him from that point forward through the rest of his life, never being able to make any real connection and commitment with women. But he had a good life. It wasn't bad, but we all kind of have those kind of things. But anyway, my point being that I guess they say a life worth living is worth recording. But as a trader, if you just jot down maybe 30 seconds or a minute and a half, maybe 2 minutes a day of what you were feeling, then you can go back and look at it and reflect back on how you were feeling those days and what the market was like. And, those are the bigger cycles in the market. Daily stuff doesn't matter so much. But you'll remember those times. In fact, I just ran across some charts. Maybe I'll show them, where I actually kind of made my bones in the market with some market call back in 2008. We'll talk about that some more. We're almost out of time for this segment. We're going to talk about some history. We'll look at some of those throwback charts because I have them up while I'm talking about them. And we'll get into some other things. We'll get into what I was looking at on Friday that made me think we were going higher. And, of course, Otis, the town drunk from Mayberry, just kind of stumbles his way forward. And that's the kind of market we've got now, stumbling its way higher. 2680 on the S&P cash, and an Otis kind of market. Otis, my man.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Then it's all just a little bit of history repeating.
On this day in 1947, multimillionaire and financier Bernard Baruch? Was he got like a son now that's kind of famous? Or is that, because I know his son died like in the 90s. But I think is the same Baruch that's part of the Baruch family? Is that still the guy that's on CNBC occasionally? Never could find out. Anyway, in a speech given during the unveiling of his portrait in the South Carolina House of Representatives, he coins the term Cold War to describe relations between the United States and the Soviet Union. Phrase stuck, and over 40 years it was the mainstay of language in American diplomacy. He was an advisor for 4 different presidents on financial issues, and actually founded a college of financial financial college, and it's thought to be one of the finest, even better than a lot of the Ivy League schools for finance. On this day in 1947, we get the Cold War, and maybe like a bad rash, it's coming back, just with a smaller country called Russia. Few things going on. You may want to take a look at an IPO from last week. Symbol on it is ZUO. They have a very interesting proposition, and that is people that want to go from selling things to subscribing and having subscribers to things is a very interesting company. They do all the cloud-based stuff to manage, launch, and transform your stuff. In all the trash that is coming out in IPOs, this one's kind of interesting. We'll watch it trade for a while. I'm not buying it right now. But Zora, ZUO, I think you might hear about that a lot in the near future. Seems to plug a gap that is kind of missing in a lot of these cloud-based systems. Always like the same thing with some of the other ones. What's the one that I want to say it's pay, but it's not? I'll think about it in a little bit. Well, I forgot to change the title for this one. This should be no leaking. Let me change that real quick. No leaking. Anyway, Apple warned its employees to stop leaking in an internal email over the weekend. And of course, it was promptly leaked. This is raising the specter of potential legal action and criminal charges with one of the most aggressive moves by the world's largest technology company to control information about its activities. It's reached out to the FBI to go after 10 people and try to put them in jail. This doesn't seem like any of those things have stuck. But when we talk about big companies acting like big companies, big tobacco and big that, seeing a lot of big action with Apple and trying to get employees not to speak about anything that they're doing. And that kind of should go without saying. But man, are these guys, they encourage leaks from everybody, but not themselves. I thought it was rather interesting, the fact that it took a whole 30 minutes for that email about leaking to leak. I think that's about it for news. Let's get a chart up here. Oh, I did want to bring up one thing. On my travels around Hollywood for a number of years working on special effects, I ran into R. Lee Army. You maybe remember him from the Full Metal Jacket movie, a handful of other things. For some reason, you run into this, the same people a lot out there, and I ran into him a bunch of times, talked to him, got a little bit of history. This is back in the 90s. But, man, talk about living an interesting life. I just wanted to play this before we get going.
Today, you people are no longer maggots. Today, you are Marines. You're part of a brotherhood. From now on, until the day you die, wherever you are, every Marine is your brother.
Well, I think he had cancer and passed away today, so we won't have him to kick around anymore. We're up 25 points on the S&P cash, 2681. Volume is light so far today. I wanted to look at a couple other charts before we get going. Then we'll look at the spreadsheet I talked about. But just wanted to do a little bit of a flashback because I should have kept the data for Lehman. But this is a great chart out here. And just everybody in the world look like this in the financial broker-dealers and everybody else. I think I got a couple of them here. But I'm just glad that I went back. This is from 2012. I apparently picked this out of previous emails, newsletters, which I didn't keep. But a pretty good indication of Lehman out here if you want to go back and look at it. But this goes back to May 5th on every one of these. And, man, this always had me looking when a handful of companies are all doing the same thing in the same sector. And basically, I had like 15, I think, of these in the newsletter one day, and it was everything. It was the loan people in that, insurance, mortgage insurance people. It was Goldman Sachs. It was Morgan Stanley. Literally everybody around Wall Street was making a test of a high on half the volume, and my power law vector indicator number was showing fairly good indications that there was no energy. 19 on the way down in March. Then it kind of bounced around for a while. It finally started going up in late April of that, and everybody pretty much had topped out by the 5th. This one topped out, I think, on the 29th or 30th of April in 2008. But good examples of how to actually wait for some of these bigger companies. I guess that's the only one I have at the moment. But I just thought it was kind of neat. Did have somebody actually ask me about Chevron, and this is what the options look like, and this is where you really start running into very steep resistance in these stocks. And in the previous hour, I asked Steve Rhodes to take a look at some railroad stocks. I think we looked at SX, and it wasn't doing very much. So I'm thinking that if the rails, if crude is going to continue to go higher, those rails should be actually absolutely skyrocketing right now and not sitting around like a dead fish on the dock. These things should be absolutely running, because guess what? They get it both ways. They get to haul sand up to the northwest, and they get to haul crude back, but not doing much, which makes me think that maybe pretty close to a high for crude here. And let's see, we'll come back. Anyway, call me at 877-927-6648. Email me at path@tfnn.com, or put a message in the den.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're talking about options expiration this week. And when I do my special chart magic on what the options are telling us, we're basically at that point Now, one of the things you need to know, and I brought this up last week, is that you want to add somewhere between 20 and 40 points on the S&P cash, which basically the same thing, 2 to 4 points on the SPYs. So it basically take you to about 2730 on the S&P cash, and about 272 on the SPYs. I think that's the way it works out. That went up about 5 points on Friday, and one of the reasons is, oh, I forgot to do that, didn't I? Okay, well, we'll do this. I went through the put-call ratios, and they haven't been telling us a lot for a while, and I am speculating, but cannot prove, that that was because everybody was leveraged out the yin-yang for the last few years with QE, and the only reason that they were doing anything was buying puts in case a meteor hit the planet, because there was an implied put with all the QE and the government basically pushing everything. So once we started looking at, especially January, started looking at QE coming off, these things started to snap right back in line. And it's not uncommon to see a put-call ratio bounce up or down for a day. What you really want to watch in these put-call ratios is when everybody decides to do it at once. And that's what we had on Friday. Now, these numbers are just for the ones that look at the S&P and the VIX. This is for the out-of-the-money puts and calls. I want to thank our friend John from Philadelphia today for asking me a question to go back and dig into these, because I did this a year ago and I forgot. And then all this data comes from the CBOE, and they don't have it on their website really anymore. So I was trying to remember what it was. I had to call them. They didn't remember what it was. After about 30 minutes on the phone, we finally figured out what I was doing, and I added some more data. The guy pointed out I could get some more data. So I added that today. So I'll be working on both of them. But what happened on Friday that was extremely different is what I actually hope for all the time. And that is when everybody's feeling about as bearish as they can, they all hop on and the market turns the other way. And of course, we did that kind of late on Friday with a swing of 150 or 60 Dow points within the end point of the day. But it's not uncommon to see a put-call ratio of what we've seen, which is 65%. But it is to see the actual volume almost double. And you get a big ratio change from either long to short in options, and the volume goes bonkers as it did on Friday. It's generally telling you that everybody's going to be wrong. Big guys on Wall Street do not wait until the market's falling apart. They are fairly slow and plodding in coming in there. But when you see whether or not it's options or short positions, you get huge short positions right at the bottom. Everybody gets bearish. It's not only darkest before the dawn, it is also the most depressed. And normally when you see these things, you get at least 3 to 5 days of higher prices because everybody is on the wrong side of the market. But you might want to start looking at those put-call ratios a great deal more. There were a lot of things that got skewed because of QE. This was one of them, I believe, but it's starting to give very good indications since about the end of January about what a lot of people are doing. And of course, you can kind of, in the smaller ranges or on the day-to-day, you can kind of look at it as the way people are going. And in the big volume days, like this one, which is, 40% higher than any, 30% higher than any day we've had in 40 days or something. That's what it's telling you. Everybody at once decides to jump on the hand grenade, and it doesn't end up well for them. Maybe they get a medal, but not so much. Anyway, give me a call at 877-927-6648. You can call me at that and email me at path@tfnn.com. So we'll look at a few other stocks that I thought were fairly interesting. Was this it? I think so. DPLO, which is Diplomat Pharmacy. Looked at this one this morning. I'm not going to be adding any positions because I think the thing to do is buy maybe calls or puts come Wednesday or Thursday. So I'm going to sit with the positions that I have that have a nice, comfortable margin in case a meteor does hit the planet. But Diplomat Pharmacy, I thought, looked fairly interesting from Friday. And that was these lows kind of, at least some of these stocks that were stuck at lows, finally getting back into the trading range. DPLO, March 1st, $19.71 with 888,000 shares. Tested it with half the volume on April 9th, and you're starting to now get the move up here. Volume's about what it was on Friday, so we're going to exceed that as we go back up. But you start breaking another 50 cents higher on some of these things, and they're going to have, you know, $2-3 higher out here. What else did we want to look at? I wanted to look at K, which is Kellogg's. This is another good one that tested its lows on lighter volume. I wouldn't be buying it. I didn't like the energy on the way down, but certainly does feel like if you're long this thing, you were waiting for a bounce to get out, you're probably going to get that to $66. 62.96, the February 6th low. You had 5 million shares. You got into it with about, what, 2.8 million shares. And now you're bouncing back into that trading range, 1.5 million shares so far. But these things are, some of these at least, are starting to make fairly good signals as a low back in here. What did I want to look at? Skechers is another one. Skechers. Now, there are a handful of these stocks that are testing previous highs now and getting into resistance. Skechers is one of those. SKX is the symbol. $42.73 on February 9th. 8 million shares into that spike. So we get into it. We go over it by a dime or so on Friday. Does so with just 2 million shares compared to the 8. We're kind of hanging up here on the highs. Energy off this low is not all that exciting. February 20th up to that high on Friday. Basically had about half the energy on the way back up. You know, you're basically talking about this thing being in a range from 42 to $38. So is there a ton of money to be made? No. But I am starting to see some stocks hit resistance levels and start seeing a couple of them. Then you see a handful of them. Then you see a lot of them, and generally when that lot of them come, that's when the market's ready to turn down. Not too many of these yet. I'm going to highlight a few of them, just like we did when everybody was bummed out. It gave me a lot of negative waves back there on those lows.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, the seniors are doing okay. Senior Housing Properties, SNH. One of the better looking charts out here that got into testing its low. Didn't quite get there on Friday, but spiked it on very light volume, which I like. 2.6 million shares back on February 28th at $14.90. And you got into that 2.6 million shares with 860,000 shares. And you're bouncing back in. The energy off that March 13th high was less than the move up from that February 27th low. So you've got, this thing, are you going to get rich? The answer is no. Maybe there's a buck in it. It's in a trading range to 1644. But that is telling you that some of these weaker stocks, especially these stocks that are basically REITs, like SNH, are starting to kind of set up. Let's take a quick look at V&Q. This is the one, of course, that broke and started the market moving lower off those highs. Once it broke the $80 range, it did so. Now it's just kind of going sideways out here. The question is, if the market's moving down, REITs almost always get beat up more than the market. I don't see anything out here that really says it. You're up a little bit on 3.5 million shares, comparing down on 3.8 million shares on Friday. So it looks like you're going to have a little bit more volume out here. Again, any of these things that come down so hard like this, they're going to go sideways for a while. What you just want to be watching is whether or not the energy to the upside is less than the downside to tell you whether these things are ready to go jump the ice on the downside. Now, this one didn't quite test its February 9th low at 72.05, got to 72.67 from 12.7 million shares to 9 million shares. So it did get into that candle, did do so on significantly lighter volume, almost 4 million shares. Now it's just kind of doing this sideways thing. Again, what you would love to see is the 72.05 tested with lighter volume. And a bigger rally in the market would probably happen if this thing did test that low on lighter volume and we have some kind of base in the REITs. But this is always going to be probably the weakest part of any downside in any market. Terso, TSRO, this thing's been bouncing along this 52.20 low from February 28th. To 4.7 million shares, got into it with 2 million shares. Now you're starting to bounce out of this. Again, a pretty good looking chart for these, kind of a late to the party thing, since it's just recently hit its low. But let's do this. Move over here. An oncology-based biopharma company identifies, acquires, and develops commercialized cancer therapeutics and oncology supportive care products in the United States. So a biotech. Of course, we've had kind of a bottom in the IBB. It's kind of been lackadaisical back in here. I think we've got another 5 points in the IBB probably before the end of this week. And again, that starts with Netflix tonight. So the IBB looking like, 109, 110 before the end of the week. And I was watching for a handful of these stocks that had been fairly weak, even though the volume was telling us that these things were probably making a bottom. Energy on the way up from February 28th to that March 8th high was pretty good. My power law vector indicator number 3.5, 2.6 on the way down from that March 8th high to the low on April 9th. So pretty good looking charts. Look like they're starting to make some bottoms out here, even though the IBB already has. And the question is whether or not, in my mind right now, is whether the IBB can get over that 109 or 110 level. And it's just kind of consolidating right now. What else do we have? Check some emails. Okay, good question. Question is from Ron about why do I add 20 or 40 points to the S&P cash? And how do I decide whether it's 20 or 40 points? And that is how many people are short. If I see a lot of people highly short in the market, then that's one thing. And he also asks, where do I look to see and find some of these short positions? And of course, I run my own scanner, but if you want one to take a look at, and you don't write your own software like me, which I understand a lot of people are not computer programmers, shortpainbot.com is one that's got some nice lists of these. Now, the real problem is on these that they're using the bi-monthly short reports that come from both the NYSE and the NASDAQ. So these things are 2 weeks old in the rearview mirror. If you find something that you really like on one of these, the next thing to do is go to the FINRA site and start adding up the volumes for short positions on a daily basis that I show you here. And that'll give you kind of a good indication. Again, those numbers don't tell you whether people went home with those short positions, but it will tell you how many people are pounding away on a particular stock. And, whether or not it's a handful. Now, Harmony, gold, pretty heavily shorted stock. It'll show you a nice little graph here on the website for this, and you can see, well, a little bit more than 25% of the float is short on Harmony. So then you probably go, okay, that's kind of interesting. HMYN, right? HMYNY, Harmony. So you go back and look at, it's not Harmony, is it? Did I do it right? What is Harmony's? Oh, we have John from Farmingham. We're going to go to him. John, how you doing today?
Fine. How are you, Dave?
Another day in paradise.
Yeah.
Cool paradise, but paradise nonetheless.
Could you take a look at AKS here?
Yep. So you've got a wonderful looking chart, kind of late to the party. And again, when I see these things and everything lines up and they don't start to run as they should, I was long this. We covered it flat at about $4.40. It's just not doing much. And volume's a little light today. If this thing's going to consolidate out for a while, the question is, when is this thing going to run? And I don't have a good answer for you. Everything looks brilliant in the chart pattern. Are you long already?
Yes. Yeah, it looked like it's bottom from the 426 area at the end of March, going sideways now. So I'm wondering.
Yeah, I mean, normally you get a pretty good V bottom out of it. I go back to Jesse Livermore. If a stock doesn't act right, then get out of it. And this is not acting right. You should have had a V bottom on this most likely within 3 days after that $4.26 low. It really didn't do anything. I gave it a few extra days. It still didn't do anything. I just watch it closely and wait for some signal this thing's ready to move.
Okay.
Because, unfortunately, when these things hang out at the lows, if the market does reverse, it can just go blow through that. So you want some kind of sign out here, maybe a lot less volume, a handful of other things. If you want to hang on.
Yeah, could I hang on? Thank you.
Yeah, you can.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Yeah, it's Harmony's HMY. I was looking at Helios and Matheson, the people that are doing the theater stuff. So I was off on that one. The 27% one is on the other guys in the theater business. Anyway, we're back, hopefully, with John.
I'm here.
Okay, here's the problem.
One more question.
Go ahead.
The SPX here, there's a gap there at the around that 270, and there's two gaps up there at the 2800 and 2850 back at the end of January. Do you see those getting filled?
Yeah, later this year.
Yeah,
I don't
somewhere.
think I.
Okay.
Yeah, but I mean, right now we're kind of in it. I wanted to talk about AK Steel.
Yeah, go ahead.
Your risk you have to look at back to that November 15th low that hasn't been tested on 23 million shares, and that's the problem. If you don't get a bounce within about 3 days, I get out of it because now you have a trade that basically says your stop needs to be 390.
Yeah.
Right. So you got a 10% downside already in this thing, and there's better stocks out there that don't have those lows. So that was the first one. The other one you're talking about is the SPX.
Right.
Bring that out.
Yeah.
I just think that maybe if we're going to go hit those, it's going to be next fall.
Okay.
My thoughts are, let me get this up here, is that right now, if we continue on light volume back up, that we see that 2720, maybe to 2750 area, and you've got that gap, which is on the 19th of March.
Right.
And you're basically talking about maybe getting into that little gap right there. And that's kind of my thought. Now, could we kind of bounce up to the high of this gap this week? The answer is yes. And then maybe by May 1st, get into that 2750. And then that's the place to kind of put your short position on. I think that would be more likely. So I'm saying that that we're kind of going to go up there probably to May 1st. And that's where you want to look if you're going to go short. I'm just thinking we got a little bit farther to go. In the meantime,
thank you, David. Thank you very much.
Sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.